Check out shares of Didi plunging more than 10% on reports that China could be considering an even harsher crackdown on the ride-hailing stock. Deirdre Bosa joins us with all the details. Debo.
Well, Melissa, if you thought that earlier crackdowns on Ant Group and Alibaba, you thought those were bad, the damage to Didi could end up being far worse. Bloomberg is now reporting that Chinese regulators are considering a slew of, quote, serious and unprecedented penalties, from a massive fine to a forced delisting or even a state-owned investor. Now, that, of course, would come on top of the pain that has already been inflicted, namely its app has been removed from Chinese app stores. It's been prohibited from signing up new users. Its offices raided. And of course, there's those tens of billions of dollars that have been wiped off its market cap in just a matter of weeks. Investors, they were already wondering when and where would all of this end? And is this crackdown about protecting user data or reining in monopolies or getting Chinese companies to list on their own homegrown exchanges, or perhaps all of the above? While they and we wait for answers or some kind of indication, shares of Didi and other U.S. listed companies continue to feel the pressure. We got to note the KWEB ETF is lower by 20% year to date. And even some of the big names like JD.com and Alibaba saw a bounce today. They're also lower on the year. Melissa.
Deirdre, thank you. Deirdre Bosa. Tim Seymour, we were just talking about Alibaba yesterday in the context of the unknown regulatory landscape. And here we are talking about a potential delisting. I mean, yes, that could be the extreme penalty here, but the fact that it's even on the table is pretty shocking.
On the table, yeah. Yeah, and guess who also owns a piece of Didi? Try Alibaba, try Tencent, two of the poster children with targets on their backs, and the cybersecurity authority, the cyberspace authority of China, is basically free to do what they want. I've said this before. When I think about the world we lived in 20 years ago, when resources, and oil specifically, were of national significance and importance and strategic assets, data is the new oil. And guess what? I mean, this reminds me a lot of crackdowns we've seen in other countries, especially places like Russia, where I spent a lot of time about it. I hate this. And at first, I've said this. I'm not adding to any Chinese investments here. I don't think that they're going to kill the golden goose. I do think that these companies have gotten religion, but 2 days after they raised $4.5 billion, $4.4 billion at $16.40 or so, it's $10 stock. No signs of let up, and clearly this is a message that's being sent.
They may not want to kill the golden geese, but there certainly is a lot of potential downside from here to that point, Karen. And so when you think about shares of Alibaba, and granted, we just talked about it yesterday, you're an investor, et cetera, et cetera. At what point do you start thinking, you know what, it's just too murky?
Well, I'm sort of in Tim's camp that I haven't added. Normally, if I have a stock, I like the valuation, I like the business, I would be adding here. But I haven't. This is the way I've chosen to play what I think of as authoritarian capitalism, which is clearly difficult. But I think that, it's sort of like, they're not the target at the moment. Didi, even though it's down a lot, that's something I wouldn't consider, because that one is even far murkier to me. The delisting is sort of the ultimate. That does make me somewhat afraid, but I'm staying with it for a while. I do have to look at some put protection, or put spreads or something for that unknown.
Shepard Smith here. Thanks for watching CNBC on YouTube.